We've got to start with Brexit, as Morgan was just saying. It looks like a mess. Even though Prime Minister Theresa May won her confidence vote, it's not clear what happens next with Brexit. How do you think it plays out?
It's not simple, Sarah, and I think as a backdrop, you really have to start with Europe. And if you look at the three most important economies across Europe, Germany, France, and the UK, each have officials who are in office but not in power. So Chancellor Merkel has announced her stepping down. Her party has announced the successor. I think we've all watched what's happened to President Macron in France over the weeks and the months. And in my opinion, yesterday was at best a Pyrrhic victory for Prime Minister May. So the leadership vacuum as a backdrop to this is a real concern. I think in terms of Brexit, the impact of leaving is probably more serious than we're thinking about. Many people talk about London and the financial center, and yeah. I think London will be London. It might be a little bit smaller, but it'll be one of the foremost financial centers in the world forever.
So when you say more serious, yeah, what do you mean?
Yeah, so what we're noticing is, particularly with our investment in Panmure Gordon, which services small businesses in the UK, and from the time I was at Barclays and would visit small companies in Leeds and small companies in York and small companies in Birmingham, every business in the UK has trade. Every business in the UK is doing business with Ireland and mainland Europe. And I think the potential economic impact on small businesses across the UK is probably greater than is in the market right now.
Wanted to also ask about the impact on your expertise, the banking sector. Wilfred, my co-host, is on a plane right now coming back to London, but he was wondering from you how damaging it would be to Barclays in particular if Britain crashed out of the EU with no deal and its ambitions to become a major investment bank in Europe and the US.
So I think the impact, if as you said, the UK crashes out, I think the real question for the UK, the one that's going around right now is, should we have a second referendum? And I think what's clear is that Europe is not going to soften exit terms. But I think the real question is this an opportunity for Europe and the leaders in Europe to offer softer terms on remaining? And if you recall, when Prime Minister Cameron was talking about the first referendum, he had been negotiating with Europe about a hard stay on immigration for a fixed period of time. And maybe it's that question, or maybe it's other questions.
You want to see a second referendum with more specificity?
Well, I think you'd have to have a different question, or you'd have to have different terms. And I think it's unlikely Europe is going to offer new terms, but I think it may be possible for Europe to offer a new question.
So how much worse shape are European banks in than U.S. banks, given the Brexit drama, the super low interest rates, the political turmoil that you discussed that's happening across Europe right now?
So in the U.S., the TARP program really repaired the large systemic banks very quickly. The TARP program put equity in every systemic bank. It said, fix your balance sheet, and until you do that...
Europe didn't have that.
And Europe didn't have that. So we're seeing just yesterday stories about Deutsche Bank, which was one of the premier banks across continental Europe, where the government is potentially going to force a domestic merger. I mean, I think those kinds of questions 10 years on from the financial crisis show the difference in the health of banking across Europe.
So why are U.S. banks acting so miserably in the market? What is that telling us?
I didn't notice that they were acting that miserably.
Banks are down, financials are down 12% for the year. And at first it was concern about steepness in the flattening yield curve, and now there's all sorts of concerns about the economy and the Fed pausing, and it really feels like banks, no matter what, can't catch a break, even though the fundamentals aren't all that bad in terms of their results.
I think so, and I think higher interest rates, which is the direction we're going in, are positive for financial institutions, but I think that there are a number of challenges that the banks are facing. Monetary policy was one. Can we manage getting back to more normalized rates, which is essential, without a crack in credit? I think it's all the concerns about trade as well. There's real underlying fundamentals to some of the imbalances in trade with China and America's trade with Canada that are being addressed, but people worry about an accident in terms of the way that it's being held. So
you don't think the Fed should take a pause?
Well, I think it should be gradual. But I think the direction is clear, that we need to get back to a more normalized yield curve and to a more normalized level of interest rates. And I think without that, we run the risk that if there is an accident, monetary policy is not going to be one of the tools that can be used. So I also think with the proliferation of easy credit, there's a host of reasons why it's appropriate for us to go back to a more normalized level of interest rates. Interestingly, Sarah, just this morning, Governor Draghi announced the end of QE in Europe and the move toward a more normalized level of interest rates there.